How is this loaded? One second, just give me 1 minute. I'll just share if I've loaded this PDF with you. Hold on. Yeah, uploaded. Yeah. Hi, evening everyone. Good evening. Evening everyone. Okay, evening. Let's start. Yeah. Okay, loaded now. Everyone has got this PDF. I'll just pin it. Okay, I've pinned it over now. I've pinned it over here. Everyone kindly download the PDF. Okay. Okay, let's start. Okay, this is the first class actually for your official first class, isn't it? Yesterday was the orientation class. And for those on YouTube, this is your last free class. Okay. There's only one free class available on YouTube. From tomorrow, it won't be available. So if you want, you can join the batches. I'll confirm to that later. Okay. Everyone, subscribe to Officers Adda 24/7 YouTube channel. Everyone. Okay. Even if you are in the paid class, subscribe to this. Also, those who are on YouTube, join the batches. I'll tell you about the batches later. Okay. Chalo, let's start. See this. Today's topic is basically introduction. Introduction means what is the role of retail banking? How does it earn income? Then what are the various things in your portion? See here, we have always to stick to our portion also. If you want to think about retail banking, you can go on for hours and hours. But what I feel is we must first stick to our portion because our main aim is clearing the exam, isn't it? So we have designed this as per your portion so that nothing extra is given to you. Otherwise, what happens? You have little time in your life. After the banking hours, you have family, then you have to study also. And then if I go on adding too much theory in the slides, then it is of no use. So that's why I've added only those important parts which are there, which will be asked to you in exam. Okay. So banks are financial institutions that perform deposit and lending functions. There are various types of banks in India and each is responsible to perform different functions. So various types of banks. What is the main job of bank? Deposit and lending. Loans and deposit. That is the only job of bank. Taking deposit from somebody and giving it to somebody. Right? That is our job. What are the various types of banks? See these. Central bank, cooperative banks, commercial banks, RRBs, regional rural banks, LABs, local area banks, specialized banks, small finance banks, and payment banks. These are the main types of banks available. Okay. In fact, there can be some other banks also. See this. Okay. First is Reserve Bank. Then after that comes these scheduled banks. Okay, there are also non-scheduled banks. So what is a scheduled bank? I'll tell you that. Scheduled banks. Then under scheduled banks come two types of banks: commercial banks and cooperative banks. Okay. Under commercial banks, again there are 3-4 types of banks: foreign banks, RRBs, public sector banks, and private sector banks. So these are the 4 types of banks under commercial banks. Cooperative means you have urban cooperative and state cooperative. Under private sector, again you have 2 types of banks: old private and new private. Okay. Similarly over here, public sector. SBI, now this is gone. SBI and its associates is gone. So everything is only SBI now, no associates. And other nationalized banks. Now these have also reduced. Okay. So logic remains the same. Always remember commercial banks, foreign, RRB, public sector and private, and cooperative, urban and the state cooperatives. Now, one more important type of banking which you might not be knowing. Let me see if I have added it somewhere. Yeah, I have added it. Specialized banks. This is not included in the chart which I gave you. Specialized banks means what? The banks like SIDB, Exim Bank, NABARD. Okay. Have you seen any branch of NABARD or any branch of SIDB? Have you seen any branch? That so and so is the branch. You go and open the account in SIDB. Can you open the account in SIDB? Then why is it called a bank? Small Industrial Development Bank of India. NABARD, National Bank for Agriculture and Rural Development. Okay. So these are called as banks, but they don't have branches. So what do? These are called as specialized banks. These are not like us. Okay. What do? They give soft loans. Now what is soft loan? Okay. Now that I'll explain you. See this. They give you soft loans. Soft. Okay. Soft loan means what? Suppose if SBI is giving some loan, what will this SIDB do? It will give 25%. 25% to that customer. So what happens? If SBI gives 100 rupees to this customer as a loan, so 25 rupees will be given by SIDB and this customer will pay only 75 rupees. Okay. So it is 100. It's like this. 25 will be given by this SIDB. SIDB, I'm just giving you an example of SIDB. It can be NABARD also. It can be any bank. And 75 will be given by the customer. Okay. So that is known as soft loan. This is known as soft loan. Soft. Okay. Soft loan means given as a subsidy type to that customer. So these are specialized banks. Remember, SIDB, NABARD, Exim, these all banks. Has anyone seen these banks? Okay, you are able to hear me, guys. 1 second. All of you are able to hear me now. Somebody has written that no voice. All you guys are able to hear me. Type yes in the comment section if you are able to hear me. Hi, good evening, everyone. Able to hear me? Yeah. Okay. Fine then. Fine. Yeah. Okay. Fine. Okay. Log out and log in. If you are not able to hear me, log out and log in. And log in if cannot hear. Okay. Everyone. Yeah. Okay. Chalo, move on. So, coming back, this firstly I told you what is the scheduled bank. See this. Scheduled bank means by definition any bank which is listed in the second schedule of Reserve Bank of India Act 1934 is called a scheduled bank. So scheduled bank is listed in the second schedule. The scheduled bank consists of those banks which satisfy the various parameters criteria under clause 42 of this act. Now remember, why have I given this name number 42? Because that will be asked in exam. In exam, they ask you two questions. One is this and second is this, 42 and 2. And third question is there of 5 lakhs, this one. Yeah. To qualify as a scheduled bank, the paid up capital and the collected funds of the bank must not be less than rupees 5 lakhs. Okay. So this is the third question asked to you about scheduled banks. So whenever we call any bank as scheduled banks, remember, these three conditions are required. Second schedule, clause 42 and minimum capital 5 lakhs. Okay. Got it, everyone? Yeah. So move on now. Okay. How many of you, are your all banks scheduled banks? The banks in which you are working? Just answer me. The banks in which you are working are all scheduled banks? Anyone? Are all your commercial banks or these nationalized banks which you work in, are all scheduled banks or no? Is there any unscheduled bank in nationalized bank? Okay. No, every bank is a scheduled bank now. Every nationalized bank. Okay. That is the scheduled bank. Whichever we see. Okay. All of them are scheduled now. All of them. Okay. So what, 5 lakhs capital, 5 lakh, this capital can be raised by anyone, isn't it? Yeah. Yeah, they are going on. Topic wise test, they are going on. See here, I have contacted the administrators also and I have contacted them, and they have told me that they are coming up with this. Okay, so let me check. I'll just check this again today with them. That what about the topic wise test or anything is going on, any problem? Because 2-3 days back I had contacted, they told me that they are going on with this and they are coming up with these test and this all these ebooks and everything. Okay, move on. RRBs. These are special types of commercial banks that provide concessional credit to agriculture and rural sector. So RRBs generally work in the agri and rural branches. Okay, RRBs were established in 1975 and registered under the RRB Act 1976. RRBs are joint venture between central government, state government, and commercial bank. This commercial bank is known as a sponsor bank. Remember, sponsor. Okay, sponsor bank. So it has 35% stake over here. Central government has 50% stake, and state government has 15% stake. Okay, so this is the this framework of RRB. Got it, everyone? Okay. Next one. LAB, local area banks, introduced in India in 1996. They are organized by private sector. Earning profit is the main objective of LABs. Now, some question might come to you on LAB. Local area banks are always private sector banks. RRBs are always public sector banks. These are public sector. Remember, public means like you nationalized banks only. Okay. Many of these banks, even I have seen this. What Bank of India is having one RRB at my place over here. Okay. So many of the nationalized banks are having the same. So LABs are private banks. LABs are registered under Companies Act. At present, there are 4 local area banks, all of which are located in South India. Okay. Specialized banks. Already I have covered this. Small finance banks. Now this is a new category of banks. As the name suggests, this type of bank looks after micro industries, small farmers, and the unorganized sector of the society by providing them loans and financial assistance. So small finance, name itself says small finance. So I have to give smaller finance to the bank, to the customers. Small amount of loans. Now examples are AU Small Finance, Equita Small Finance, Jana Small Finance. Many banks are there. Okay. Payment banks. Now these here, small finance and payment banks, these are 2 new categories of banks which have been introduced. The newly introduced form of banking, the payments bank, has been conceptualized by Reserve Bank of India. People with an account in the payments bank can only deposit up to 1 lakh and cannot apply for loans or credit cards under this account. So these payment banks are not giving any loans up till now. See here, up till now they are not giving. Tomorrow what happens, we don't know. RBI might come up with a policy stating that okay, payment banks can now give the loans up to 1 lakh. So that's done then. So Airtel Payments Bank, India Post Payments Bank, Fino Payments Bank, then Jio Payments Bank. So there are many payment banks which have been introduced in India. Okay. Why retail banking? Why are we studying retail banking? Because look at this. In the overall banking perspective, who earns the majority income? This is corporate banking. Wholesale banking means corporate banking. It earns 23% of the income. Retail banking earns 62% of the income. And wealth management earns 15% of the income. So who earns major income? Retail. So that's why all are focusing on retail banking now. Okay. Everyone is focusing. Paytm giving credit card. Yeah, it is giving. So it has been allowed now. Paytm is not this small finance, this what? Payments bank. Paytm is a full-fledged bank, small finance bank type of thing. Okay. Paytm is not a payments bank now. Paytm is a small finance bank. Okay. It has taken a license under small finance. It's that neo bank without any branch. So that is allowed now. Paytm can give credit cards. Paytm is giving loans. Do you know there is a 330% rise in loans of Paytm? 330% rise. So it has given a huge business competition. Okay. Yeah. Payment banks revised 2 lakhs. Okay. It is revised. Okay. So remember, so payment bank it is revised 2 lakhs. It is said. Okay. So you can take this figure as instead of 1 lakh, you can take it as 2 lakhs now. 2 lakhs. Okay. Okay. So move on. What is the retail banking segment and why are we studying retail banking? See here, your total topic is retail banking and wealth management. Why are you studying retail banking? Because of this income. 62% income is received in from retail banking in the entire banking sector. Okay, and you see what happens in corporate banking. That yesterday's bank, SVB Bank, right? SVB, that bank, Silicon Valley Bank, corporate bank, what happened? Gone, isn't it? Retail bank generally never fails so fast. Retail banking is the largest earnings contributor. It is a segment most people are familiar with as it includes operations that occur in the bank's branch. So retail banking is mainly for local customers, individual customers. Products involved in retail banking include deposits, credit cards, and mortgages. Mortgages means all these home loans, car loans. Car loan is a hypothecation, but home loans, factory loans, all these things. Okay. The segment is also known as personal banking. Say this personal banking. Why? Because we are totally targeting these individual customers. However, it is also targeted towards small commercial clients. Means we also give the loans to proprietorship, right? Or partnership, or even smaller private limited companies, smaller companies whose turnover is less than 5 crores. Generally, we give it to them. Okay. So retail banking is mainly towards personal banking, but we also cater to the smaller clients, smaller companies. Revenue from retail banking is split into interest and non-interest origins. Now, interest and non-interest means what? Interest income comes from loans. See this, interest income comes from loans. Okay. And non-interest income comes from where does this come? Insurance, mutual funds, right? Demat. Okay. So these are all the non-interest origin products. Okay, where we act as an agent. Here we act as an agent. We don't. These are not our products. Insurance is not bank's product. Mutual fund is not bank's product. But we are agents, like the LIC agent. Similar to that, we are the agents. Okay. Net interest income accounts for approximately 70% of the revenues. Obviously, interest income will be the major part because that is our product, loans, right? It is calculated by taking the interest collected from mortgage and credit cards and subtracting the interest paid on deposits. So basically, how much I earn on the loans and how much I pay on the deposits. That's the difference. That difference is known as NIM. What is NIM? Net interest margin. Net interest and margin. I'll write it over here, right? There's a photograph of mine, so you are not able to see it over there. Okay. So net interest margin, right? Yeah. Payment bank deposit fee revised 2 lakhs. Yeah, done. So non-interest income contributes around 30% of the retail banking. Okay. But remember, many of the banks have increased their non-interest income. Means this agency commission they have increased. For example, I'll give you the example of HDFC Bank. HDFC Bank has almost, if this loan income is 70%, they have similar to 70% only, or 50-50 they have come to. Means such is the rise they have made in this non-interest income, agency commission. Okay. So remember, the more any bank focuses on agency commission, the more it will grow. Remember this, the more any bank focuses on agency commission, the more it will grow as such. Okay, that's why all the banks are focusing on that now. Okay, evolution of retail bank. So the evolution of retail bank in India can be traced back to the entry of foreign banks. Now understand one thing. In some books, you might be studying about the evolution of banking. Some websites, some banks, some books give you about this. There was a bank in 1774, first bank in India, that was called as some Bank of Hindustan, I think so. Bank of Hindustan. Okay, that was in 1774, something at that time only. Okay, but the point over here is, should we go back to those details? Then 1774, who's concerned about that now? What are we concerned about? Your portion. What will be asked in the exam? Nobody will ask you about this Bank of Hindustan. They will ask you about when did this retail banking come in. So retail banking came in at the time of entry of the foreign banks. Mainly retail banking was brought in by these foreign banks when they came in. Okay. The conventional banking business was carried on by public sector banks. So earlier, all these public sector banks of ours, okay, we all carried out the business of banking, but we didn't focus on retail banking. We focused only on corporates, companies, okay. So we only focus on corporates for loans. And retail, we took investments. We took the deposits from retail customer and gave loan to the corporates. But what happened? After these foreign banks came in, they introduced the retail banking. So loans were started for the retail customers also, on a more generalized approach, and there wasn't any specific demarcation. Customer and industry segments were adopted in the business plan of the banks. So now customer and industry segments. So both were given the loans now. Earlier, we gave loans only to corporates. There was no attempt to offer products and services based on the specific customer segments in a focused way. So before this retail banking came in, we did not focus on the customers, individual customers. We focused only on corporates. So that was changed after the introduction of retail banking in India. The entry of private sector banks in early 90s means when 1994. 1994, all these new age private sector banks came in. Here, private sector banks are of two types. Always remember, private sector are of two types. One is old private banks. Old means what? Karur Vaishya Bank, KVB, Karur Vaishya. Karnataka Bank, Karnataka. These are all old banks formed before 1994. And which are the new ones? New ones. These are HDFC Bank, aggressive HDFC, ICICI. Okay. Then third one, there are many. You can name it and you go on and on. Okay. Axis, many are there. So forget it. So the point over here is, the entry of private sector banks in 1990s created a new approach to retail banking by the banks. They had the advantage of technology right from the start. Right from the start. Now, what do you mean by this? Yeah, service, Axis is there. Axis Bank came in. Many banks came in. Yeah. Sure. Always remember one point over here. All these private sector banks, when they came in, new age, after 1994, from day one, they started online banking. Day one, online banking. They started multi-city checks. Day one, they started multi-city checks. Okay. These banks had a clear mind with retail banking and aggressively strategized for creating new markets for the retail part. So they had a huge clear focus about retail banking. They knew where they have to target. Because even now, if you see, HDFC Bank's retail portfolio is one of the biggest portfolios. Okay, one of the biggest portfolios, HDFC Bank's retail portfolio. Similarly, all the other banks also, private sector banks, means like this ICICI Bank, mainly focusing on retail. Everyone is focusing on retail. Why? because the problem with retail bank is lesser. The retail banking is very tough to go down. Corporate bank can go down anytime. For example, as I gave you this example, SVB, right? SVB, Silicon Valley Bank. Also, there was a problem earlier, 3-4 years back in Yes Bank. Yes Bank, anyone has heard the problem 2018-17? There was a problem in Yes Bank. Anyone knows? Who can answer? Have you heard about this Yes Bank problem? Everyone? Correct? Just type yes for Yes Bank if you have heard about this problem. Correct? I'll tell you the problem with Yes Bank was at that time. At that time, Yes Bank was 68% in corporate. Okay? And only remaining some 30%, 32% in retail. At that time, such was the scene. So that's why it failed very big, very hard. Now, after 4 years, Yes Bank has reduced this content. It has gone down now. Gone down. And it has increased this content. Retail banking has been increased now to almost 45% roughly. Okay? So that is the way it moves. That's why all the banks are focusing on retail banking, because retail banks are very tough to go down. Okay? Corporate banks are very easy to go down. Okay? Got it, everyone? Chalo, move on. Prerequisite for success of retail banking means how can the retail bank succeed? How can any bank succeed in retailing? Okay? To succeed, what is important? One is customers. Here, always remember, one is customers. Okay? And second thing, what you require? You always, here, whenever you deal with the customers, you must always follow the principle of RED. R, E, and D. If you want to succeed as a retail banker, how? RED means what? Respectful. Respectful means respectful. You must have better knowledge than the customer. Always remember. You must have better knowledge than the customer. Only then the customer will respect you. Second, E means easy. Easy means you must speak to the customer in his language, in his or her language. Even though you might be having good knowledge, but you must be able to communicate with that customer in easy fashion, so that the customer feels that you are one of them. And last one is dependable. So dependable means what? If you promise to any customer something, you must follow that promise at any cost. Okay? If you can't follow that promise, you must immediately tell that customer that, see, I had promised you, but I can't do it now, because that is this is the problem. So then the customer will always respect you more if you come up with the problems, if you tell them your problems. So prerequisite for success in retail banking is basically you must follow this principle of RED. Okay. So what are the important points over here? Present of efficient delivery mechanism. Delivery means what? Delivery. How do I reach my customers? Customers' needs and presence of channel innovation and preferences. Channel innovation means what? How do I reach my customers? So what are the channel innovations now? What all are the channels available? One is branch. What all channels do we have in our banks now? Branch, ATM. Then you have internet, iBanking, website, I'll call it website. Then you have what? App, isn't it? You have app as such. Then what do you have? Mobile banking, telephone banking, telebanking also you have it. Tele, right? Telebank. Tele, I'll just write teleb. Okay. So these all are the delivery mechanisms. You can reach to the customer through various ways. Is there any other way? Branch, ATM, website, app, telebanking, any other way you remember? How many of you? Can anyone tell me any other way out of this other than this? Yes? Just type in the comment section. Everyone type in the comment section. Yeah. Any other way which you remember? Branch, ATM, website, app, telebanking. Very good, Heman. Very good. That's what I was expecting. Doorstep. Correct. Doorstep. Social media. Good one. BCs. Oh, so nice. See this. So, doorstep banking. Doorstep. Okay. Doorstep banking. Then what? This BC is business correspondent. BC is, and in private banks we call it DSA. DSA, BC is both one and the same thing. Okay. Yeah. Social media. Good one. Social media. Social media is one of the important part now to reach to the customers. Okay. So these are all delivery mechanisms. Do you know there is an account system in many of the banks. Even SBI has it, ICICI has it. They call it social media account. Social media account means they fetch all your details from the social media and then they can open your account. That is also allowed. Of course, there are certain limitations to this. You can't go and open every account. Okay. So social media account is one of the important data from where we can fetch it. Okay. There is something called as the social media will grow very fast now in India. Why? Banking on social media. Why? Because there is something called as account aggregator. Okay. Account aggregator system is coming up. Account aggregator. This system is coming up now in India. Okay. And RBI has brought the paper presentation for this. Account aggregators. This will search your data from social media, from your account statements, and then it will give you the loan credentials like we have CIBIL now. But CIBIL cannot check your bank statements. CIBIL cannot check your bank statements. Account aggregators will be able to check your bank statements also, saving current. So this is a new type of banking which is coming up. Okay. Okay. Next one. So success. How do I succeed in retail banking? Direct banking. The fastest growing and the dominant channel of the future. Direct banking means internet banking, this app banking, social media, directly reaching the customers. Okay. There is something means all the banks are now, what are they trying? They're trying to reach customer as fast as possible, so that they can grab that customer correctly. Okay. So they are trying to remove the middle persons over here. Okay. Like we had, what did we have earlier in this retailing segment? Whenever you wanted to buy some television, TV, suppose if you want to buy fridge, okay. How did you bought it earlier? How did you buy it earlier? Going to the shop, and then in that shop, how did it come? Shop, right? Shop, it came from distributor, right? Distributor, it came from company, right? So that was the channel. Now, one either mall or second online, company to the customer online, no middleman. Same thing is happening in banking also. Head office, instead of company, I'll write it HO. Okay. HO and a customer. No branches, ROs, everything. Directly moving on to the customer. Okay. So that is direct banking channel. Product appropriateness. Appropriateness means what? What is required by the customer. If that customer requires loan and I am selling him mutual fund, then that customer will kick me, isn't it? So appropriateness means what is required by the customer, that is to be sold. If the customer requires loans, I have to sell him loans. If the customer requires mutual funds or investment, I have to sell him this mutual fund investments and any of these mutual investment schemes. Okay. So importantly, remember, product appropriateness means what is required by that customer. You need to sell that only. Don't try to sell what you have to sell. Try to sell what the customer requires. Always follow this strategy. And last one is pricing. Pricing means what? See here. If in the market now your home loan prices, home loan, what is the home loan rate going on now? Around, I'll tell you, 9.5. What is the home loan rate of your banks now? 9.5, 10. What is it? Anyone? Yeah, what Ravi Kumar, you want to ask something? Ravi Kumar, please ask you. You want to ask something? Some query? Ravi Kumar. Okay, you can ask me. Huh? Have you asked any query up till now over here? Corporate, yeah. Yeah, you can ask the query. Huh? Anyone wants to ask any query, you can directly ask me the query. Okay? Yeah. Please ask the questions on the topics. Yeah. 9.55. Yeah. Okay. So, 9.55. See here. Roughly it is the same, 9.5%. So what do you mean by this? You mean by the pricing of the loans should be the same. Okay. Remember, these topics are there in your books. Okay. These are there in your portion. So you have to study this at any cost. Okay. Everyone. So it's not out of the book. It's everywhere. Everything over here, you'll see it in the books also. And in the exams also, you'll see these points. Means in the exam, they'll ask you the question, what is the prerequisite for success of retail banking? And these 4 options will be given to you. You will have to answer this only. Okay. Presence of efficient delivery mechanism, direct banking, product appropriateness, and pricing. So these are the important points which you have to remember in exam. Okay. Pricing means what? If the home loan is going on at 9.5% presently, and if my bank sells the home loan at 12%, will anyone come to me? No. Pricing means what? Whatever is going on in the market, the same price I need to follow. Okay, that is the meaning over here. Okay. If the FD rates are presently going on, let's say 7.5 to 8%, 7.5 only, I think 7% now they might be going. So if the FD rates are 7%, and if I'm giving the FD rate of 5%, nobody will come to me. Okay. So that's why pricing means whatever is going on in the market, I'll have to follow that pricing only. Okay. Scoring models for assessing credit worthiness. What do you mean by scoring models? This means CIBIL. CIBIL. What is CIBIL? Credit Information Bureau, right? Yesterday, I think so, we did something about CIBIL. I told you what is the minimum score of CIBIL? 300. What is the maximum score of CIBIL? 900. Right? And what is the good score of CIBIL? From 700. 700 and above, everything is a good score. So scoring model for CIBIL means, I have to give the loans now to the customer based on the CIBIL score. I can't give the loan to any customer without his CIBIL score now. Okay. Customer protection environment. Now here it means charges. Charges. Okay. Charges means I should not charge extra to that customer. Extra means what? Many of the banks have the habit of charging this charge, that charge, statement charges, some SMS charges, all these charges, right? If the customer goes in the court for any unlawful charges, the bank has to bear it. Okay. Got this point? So customer protection environment means the there are various laws now available to you. You'll have it in PPB more. In PPB, you are having this Consumer Protection Act. Okay. So if some customer goes against you in Consumer Protection Acts for any charges, unlawful charges, then the bank will always have a big repercussion of the same. So that's why for succeeding into the retail banking, you have to focus on the consumer protection, means you shouldn't charge extra to any customer. Okay. Challenges. What are the challenges in the retail banking? Challenges are again the same: customer protection and pricing. So you can't charge anything extra to the customer. You can't, your pricing should also match with the market. Matching with the market is important. Otherwise, no customer will come to you. Okay. Inadequacy of MIS. Now, what is MIS? MIS, we are having a separate topic: management. Okay. Information system. Okay. Management information system means the database of the customers. What does that customer require? The requirement of that customer has to be matched by me. So if I don't have the right database, so definitely I'll be facing the brunt. I won't be able to cope up with the customer's requirements in that case. Understanding of KYC. This is KYC AML issues. If I make some mistake in KYC, RBI is definitely going to fine me. RBI will always watch you on KYC and AML issues. You might be reading in the newspapers every now and then that this bank fined so much for this KYC issues, AML issues, that bank fined. Why does this happen? Because if you miss out on any AML issue, that is considered as a serious offense by RBI. Because AML is a very big issue. What is AML? What is AML? Anyone? AML is anti-money laundering. Anti-money laundering. Okay, laundering. LAUN. Okay, laundry. Okay, laundering. Okay. So AML means anti-money laundering issue. So this is taken very seriously by RBI. Always remember. So every bank, in a fastness of or in the speed of doing the business, it shouldn't happen that you compromise on the KYC AML issues. Managing the risk. How to manage the risk? Here, risk can be managed in two types. One is loans. For managing the risk in the loans, I have to follow the basic concentration concept. Concentration means, what is concentration? Concentration means I should not give the loans to one sector. Means suppose if I give the loans only to the IT companies, and tomorrow if IT companies go down, then what will happen? My bank's loans will also go down. What happened to that SVB bank? SVB bank, same thing happened. They had all the accounts of startups. Okay. The loans were also given to startups. So if that sector fails, the whole bank goes down. Okay. So managing risk means I can manage the risk on loans, and on deposits also I have to manage the risk. How? If I give you higher rate of interest to the customer than what I am earning on the loans, or my NIM doesn't get adjusted, then again I fail. Okay. So managing the risk means managing the risk on loans as well as the deposits. Okay. Effects of disruptive technologies. What is disruptive? Now this word is given in your book also. If you check out your book, it is given in your books. Okay. Screen not clear? Are you able to see this, everyone? Yeah. You guys are able to see this now? What am I writing? Okay, just everyone type yes in the comment section if you are able to see this. Yeah. Just check your internet part. Okay, Srinath. There might be some internet issues because others are typing yes. They are able to see it. Okay. Okay. Not an issue. Move on. Okay. So disruptive means what? What is disruptive? Disruptive means something new which has come in. For example, in banking, what is the disruptive technology now? Disruptive is this Paytm. Paytm is a disruption. Paytm is giving more loans now. It has increased the loan concentration. PhonePe is also giving loans now. Remember, Phone Pay is also giving the loans like the bank. So these are all disruptions. Disruptions means what? Those who come into your space. Now I'll tell you, in banking space, there is nothing not related only to banks. Loans are not given by the banks only. Okay, let me remove everything. Loans are not given by the banks only. Who all give the loans? Banks give the loans to retailers. Banks give the loans. Then NBFCs give the loans. NBFCs. Then these neo banks or this Paytm neo banks, they give the loans like this Paytm. Okay, they are giving the loans. E-lenders, e-lenders. There are many crowdfunding institutions. The e-lenders means these are crowdfunding. What is crowdfunding? This has come into the banking space. Remember, banking is not the same which you do it in your nationalized banks. Okay, crowdfunding means it has come as a competitor to the banks now. So e-lender, there are many e-lenders who are doing the crowdfunding. Okay, so NBFCs, neobanks, e-lenders, banks, all of them are in the same space. So these are all disruptions. Disruptions means who are here to disturb your overall banking system. Okay. Future of retail banking. Rise of young Indian professionals. Basically, see here, retail banking will grow only if the youth will grow. If there are more young people in India, only then retail banking will definitely grow. Remember this, because retail banking is completely attached to this youth as such. Okay, it is totally attached to the youth. Okay, so as the youth rises, retail banking will definitely grow. Growth has the economic superpower. If India grows as an economic superpower, retail banking will definitely grow. Why? Because everyone will receive the funds. Everyone will receive higher money, increasing the purchasing power of the middle class. So, as everyone receives more money, purchasing power of the middle class will grow. So, that along with UPI, if UPI grows and purchasing power of middle class grows, India means retail banking will grow leaps and bounds. Remember this. Financial market reforms. So what all are the changes? Reforms means changes. Changes means the same example of UPI. UPI. What is new thing coming up in the banking now? What is the new thing which you are getting in the banking which is coming up now? It has not come up till now. That is CBDC. This is a financial market reform, central bank digital currency. Once this comes in, your note printing is gone. Not required to print any notes under CBDC. RBI will distribute it. Okay. CBDC is of two types, retail CBDC and wholesale CBDC. Okay. So this is one of the big thing coming up in the banking system, and that is called as the disruption. See, this disruption word was there. This disruption means this CBDC. Reform means this CBDC. Okay. What are the business models? See here. Business models in retail banking are, one sec. Let me see the timing. Yeah, it's there. Yeah, there are drawbacks, but they'll be taken care of. Not an issue. That's what they are doing the pilot testing now. Pilot testing is done in these 5-6 banks. Once it is through, the drawbacks will be taken off. Isn't it? Yeah. Yeah, it won't be. In fact, it's a big topic. I'll take it in the artificial intelligence. When it comes now, there's a topic of technology to you. In that, I'll take the CBDC. Okay. Okay. Now focus on the business models. Remember, there are 3 business models available in banking. 3 business models. One is SBU. Second is departmental approach, and third is integrated approach. These will be asked to you in exam for sure. For sure. SBU approach is definitely asked in each and every exam. Departmental approach is asked less, I will call less. It is not asked that much now. Integrated approach, yes, it is again asked. But this SBU approach is asked most of the times in exam. Okay. Why? Because there are 2 factors to this. I'll tell you what are these factors. Okay. So the models adopted by the banks vary among the public sector, private sector, and foreign banks. The main approaches are these. Okay. What is the SBO approach? SBOs can be defined as the profit centers which focus on product offering and a market segment. An SBO can be the business unit of a large corporation and it can be a business in itself. Understand what do you mean by SBO? SBO means here it is a profit center. What is the profit center? It means I'll explain you one simple thing. How many departments are there in banking? Let me cover only 3 departments. Clearing. Second is what? Cash. Right? Okay, let's cover only 2 departments. Clearing and cash. Okay. Now, if I have to make this department as SBU, clearing as SBU. So what will I say? Say this clearing department needs to earn its own income. It needs to earn its income. You'll say, how will it earn income? Clearing department will earn income by passing on the leads for opening of new accounts. What all clearing department gets as the checks of various customers, those will be passed on to the sales team. And once that account is generated, clearing department will get their share from that account, from the income. So that is called as generating the income. So SBO means each department should generate their own income to cater for the expenses. Income and expenses should match for each department. Income should be greater, in fact. Similarly, cash also. Cashier needs to generate their own income. How? The more cash deposit anyone is doing, you need to convert that customer for insurance and third-party products. So that is SBU. It's a profit center. Every department needs to generate their own profits, which focus on product offering and market segment. An SBU can be a business unit of a large corporation or it can be a business in itself. So each unit will be a business in itself. Cash, clearing, transfer, and loan, account opening, everyone will be there a business in itself. Second main point about SBO is this MBO. This is always asked to you in exam. Management by objectives. The demarcation as a SBO is more a management by objectives process wherein the business model is dealt as a modular strategy for achieving targeted profits with the provision to knock down the module if the retail plans are not transferred as per the objectives. Now remember what do you mean by it's such a big sentence. I'll give you a simple line. Management by objectives means first I decide on the target. This year I have to grow 10%. This year I have to grow 10%. So accordingly, I'll give the target to each employee. Each employee, I'll tell them you have to bring 3 insurance policies per month. 2 insurance policies per month. So depending on my objective, I am managing these employees. I am first setting up the target and then giving the targets to the employees. That is meant by management by objectives. First I have to decide on the objectives and then I have to pass it on to the other employees. Next is this departmental approach. The approach segregates the function of the organization into departments such as accounting, marketing, finance, all these things. Means basically departments. In our bank, we have this clearing department, right? Then cash department, and so on and so forth. It goes on. Generally, every department has its manager and a chain of command. Public sector banks in India generally have adopted a departmental approach as the retail banking business. So PSBs mainly have this departmental approach. We don't have the SBU approach over here. But remember, presently you are having departmental approach. After 10 years, it won't be the departmental approach. After 10 years, you have to go to SBU approach. Remember, SBU is the theme of any banking. Integrated approach is usually adopted by smaller businesses, small companies. They are generally not adopted by big banks. It combines all socio-economic aspects and adopts a cohesive means what? Joint approach to tackle the problems of the business. It means what? all the departments work together. Clearing, cash, transfer, all of them work together. And this is possible in smaller banks. It is not possible in big banks. It is assumed that having unified business would reduce the risk and increase the profitability through scale rather than having separate entities for each business line. So unified business means all are working on all the departments. Okay, all are working together with the motive. So that is generally happening in these smaller businesses. Okay, so that is integrated approach. Okay, so we'll stop over here. In the meantime, those who are watching on YouTube, okay, no interest for CBDC. Up till now, there are no interest. Later, we'll be having it. Okay, so those who are watching for YouTube, okay, those who are in the class, you can leave if you want. Huh? But those who are watching on the YouTube, kindly check the batches. Here, today the batches started. Those who are in the class, you can leave now. Not an issue. Paid class, you can leave now. Okay. And those who are in the YouTube sessions, okay, one sec. Let me show. This is not working right now. One sec, yeah. Okay, bye everyone. Okay, those. What is this? It's not working over here. This sharing is not working. Hold on. So those who are watching on YouTube, kindly join the batches ASAP. Use the code Y432. Remember, use the code Y432. Join the batches because you are having 80% off going on right now. 80%. And on Mahapacks, you are having 80% off and double validity. You are having 15 plus batches in Mahapacks. What is a Mahapack? Mahapack means 15 plus batches you are having. So join the batches except this offer won't last long. Okay. So now you have seen today was the first class. Correct. Today was the first class. Yeah. Let me show you. Okay. It's coming now. Let me show you because it was not happening earlier. Hold on. Let me show you how to go to the batches. Okay. Those who are watching on YouTube, kindly check this. Okay, those who have already joined, so you do means you can leave now, huh? You guys. Bye everyone. Those, yeah, see this on YouTube. You can join the batches using see this JAIIB and 23, JAIIB 23. Click on this. Now click on these batches. English batch. Click on this English batch. You will see the details. The details of what is the starting date. What are the timings? How many days of the week? Remember, recorded videos are available 24/7. So what happens because of this? If you miss out on any class, you can come back to that class again through recorded videos. 2 interactive classes. You can ask the questions there and then itself. Just now you saw many of the students ask the questions there only. Ebooks are available. Then subject-wise expertise is available. So you can definitely go for this and look at the fees part. Fees part is what? 80% off. Click on view offers. Put the code Y432. Click on apply. Now look at this. 80% off. 19,999 reduces to 3,999.80. Such a huge discount you are getting. Okay, so go for it now. Also, I would suggest go for the Mahapacks. In Mahapacks, what happens? Mahapacks, you get 15 plus batches per subject. See this Mahapack. Let me show you. So the JAIIB CIB Mahapack, JAIIB CIB Mahapack over here. Click on JAIIB ka Mahapack over here. Now look at this. Once you click on this, you'll see all the details. 15 plus batches for PPB, IFS, AFM and retail banking. Okay. Also the validity is 6 plus 6 months. Okay. Now look at the fees. Click on view offers. Put the code Y432. Never forget this code. Y432. Click on apply. Look at this. Okay. So 6559. 32,796 reduces to 6559. And that also 12 months. So you generally don't get these offers again and again. Okay. So join it ASAP. Everyone. Okay. I'll leave now. Tomorrow I'll be back with another session. Till then, bye. YouTube guys, you are having this last session. From tomorrow, paid classes only. No YouTube sessions for the class. Okay. Bye everyone.